Hi, everyone, viewers, Aaron, Nami, and Drew, who are here with us. I'm Jon Keidan. I'm the founder of Torch Capital, an early stage consumer-facing fund in New York. We invest in platforms, companies that have a direct relationship with consumers and generally mission-driven and disrupt industries. And so this is a great conference and a great panel with everyone here, deep in changing things in their worlds. Fintech is an area that we invest in a lot, and we've Acorns and Jeff Keidan, who's one of the founders of the conference, and worked with him a long time. And other companies we've backed, Say and Harness, digital bank for small businesses, which we spoke earlier. And it's a really exciting area, and obviously interesting times with COVID. And so today we've got three companies, Lex, Carver, and Harvest. And I guess I'll start by letting each of the founders introduce their companies. I think it may be more efficient that way. So Nami, why don't we start with you? Nami's the founder of Harvest.
Yes, absolutely. So hi, everyone. I'm Nami Baral. I'm the founder and CEO of Harvest Platform. At Harvest, we're building a platform to eliminate bad consumer debt. Bad debt is a $3 trillion problem across bank fees, credit card charges, personal loans, student loans, and all sorts of other kinds of consumer debt that you can imagine. And we're building an artificial intelligence-enabled solution that can automatically negotiate and reduce your debt burden by negotiating directly with your financial institution on your behalf. We are based in New York. We've been around for about a year and a half-ish, and we have already served hundreds of thousands of customers, and very glad to be a part of this team.
Great. Drew, why don't you go next from Lex?
Happy to. Hi, I'm Drew, the CEO and co-founder of Lex. What we've created is the first commercial real estate securities market, providing liquidity for real estate owners, allowing them a new refinance. On the other side of the product is a new public and liquid market, accessible for both retail and accredited investors and non-accredited investors, but also being able to sell these securities that capture the true wealth creators of and the benefits of direct real estate ownership, but allowing it to be in a public and liquid market sort of made sense for having the largest asset class in the world, and then allowing both wealth advisors, RAs, and institutional firms to also participate by being able to access these securities and buy, sell, and trade throughout the financial infrastructure that's already in place.
Did we lose John?
I'm back. Aaron, tell us about Carver.
Yeah, hi everyone. Aaron Shapiro, founder of Carver, Edison. We specialize in working with publicly traded companies to help increase participation in their company stock plan. At a really high level, what we do through our patented technology called Cashless Participation, we make it possible for employees of America's publicly traded companies to own stock in their company without actually paying for it. We've been lucky to revolutionize America's first modern financial benefit in employee stock purchase plans, which have been around since 1964. In fact, we're around 14 years before the 401k, and we've built out the infrastructure and are lucky to have clients and partners of some of the biggest brands in the world. And let me just say a very special thank you to Eli and Jeff for the opportunity in putting this together and their incredible support. It's amazing to see the Treasury platform come to life, and look forward to one day doing it in person.
Someday.
I'll second that.
Yeah.
Second that completely.
It's impressive how quickly they put this together, and it's an amazing group of people they've assembled. So let's start. COVID topic. I think the first place to start would be, how has it affected your businesses? What are some of the patterns and trends and changes you're seeing, both for your own companies, but also in sort of industry-wide, especially just in the last couple of weeks, and where you think things are going in the next couple of weeks? Aaron, why don't we start with you?
Yeah, absolutely. So working with companies that are publicly traded is a little bit unique because especially when you look at what's happened to the stock market generally, there are a lot of companies out there whose stock price is taking a serious hit. And what we're seeing is that, especially within some of the sectors that are on the front lines of this, healthcare, food services, some of the biotech companies that are working on vaccines, a lot of the executives of these companies are looking for powerful ways to not just protect their employees, but provide them opportunity so that once we get to the other side of this, those employees are rewarded for all the incredible stuff they're doing right now. So things are changing really quickly, especially with public companies, and there are some companies that are seeing a little bit of a cash crunch, others that are in sectors that are doing well. But I think it's fair to say across the board, executives are looking at ways to protect their people, but also reward them for a lot of the amazing stuff that's happening right now.
Have you seen, since you're working exclusively in the public markets, have you seen adoption increase, or are you more people are finding your service, or people hesitate to do anything right now and are just sort of stuck because of the uncertainty?
No, I mean, our sales team has been overloaded by inbounds in particular, because one of the things that's so unique about cashless participation is we actually bring a lot of cash onto the balance sheets of these publicly traded companies. So especially as companies are looking for different levers to pull to strengthen and protect their balance sheets, given the uncertainty, we're a really efficient tool that companies use to balance corporate finance needs with employee benefits.
Got it. Nami, what are you seeing from sort of, are people desperate to be renegotiating right now, or tell us what you're seeing?
Yes, absolutely. So it's been extremely interesting times for us. The typical customer that we served even before the crisis was the average American, right? The average American lives paycheck to paycheck, does not have $400 in the case of an emergency. You can only imagine what's happening to that customer right now, right? Post-crisis, the situation is even more dire. And so, for us as a company, it has been just go, go, go. This is such a massive opportunity for us to really make, strengthen the impact that we're making before at a much larger level. So it has accelerated our product roadmap. It has obviously, given us the fuel to continue to work day and night to help more and more customers and get them much needed money back in these really, really difficult times. In terms of the industry in general, right? We typically negotiate with financial institutions. So financial institutions are also trying to figure out what to do in this case, right? There are obviously large banks that have had huge, customer service teams, which are just they're in the process of trying to figure out how to provide service to customers. They're in the process of trying to figure out how to get them to do remote work, try to figure out all the data security, privacy related concerns when they're asking their employees to work from home. So it has caused huge backlogs for even the most major banks in the US who are not able to respond properly to this. And obviously we have a solution that can help customers not have to call banks, not have to spend time getting already, they're already stressed out, but they don't have to spend more time getting frustrated, with like 3 and 4 hour long call lines with the bank. So we are seeing obviously a little bit more of an opportunity for us, but the entire industry is in wait and watch mode and trying to figure things out. Interesting.
Drew, just on your side, and you're obviously focused more on the real estate, especially commercial real estate side of the industry. We'll hear your perspectives again, how it's affecting your business, and then what you're seeing in the industry, because that's a crazy space to be in right now.
Yeah, and actually sort of one affects the other. I mean, commercial real estate just faced a reckoning come COVID-19. It's also one of the reasons why REITs got hit a whole lot harder than expected, even compared to the market. And there's just been a complete dislocation in the real estate equities and also the commercial mortgage market, which has just created unprecedented challenges for real estate owners from the little guys all the way up to the major institutions as well. And it's always nice to sort of have like the silver lining where we're going through something that is unprecedented. We don't have enough data, so we can't really evaluate it. However, by having a product that gives them the flexibility to both be offensive and defensive, it's something we've actually seen a massive uptick in sort of the larger, more institutional real estate owners looking for these alternative sets of capital and sort of new ways to position their portfolios, whether it's looking to sort of take advantage of the situation right now that's in, just so you have more cash on hand, since cash is king, especially in this world. And then to other people just looking to reposition and like fortify the current assets that they have and just support everything through it, since what you have to be able to do is hold through the drawdown and then you can make it through the other side. So we've seen a massive uptick since the beginning of quarantine, and even as they're going through right now and just evaluating what their options and choices are. So while it's a situation we would hope to never go through, it actually seems like a very attractive, well, from the business perspective, life has been good and busy and there aren't enough hours in the day. But then sort of along the lines of like the financial institutions, they're facing the exact same issues. So they're actually becoming more responsive, since it is their institutional clients who are looking for these solutions. So it's been a lot more inbound from them than outbound from us. So just fascinating to see how the markets adopt and how they're quickly looking to sort of stabilize.
That's really interesting. So basically, from what you're seeing is that the market's dropped, and rather than turning people off, people are realizing it's a time to buy in.
Oh, absolutely. I was just announced JP Morgan is raising another $10 billion fund. They're not calling it opportunistic opportunities. It's more sort of COVID related. They tried to frame it as not seeming like they're being sharks in the water. Yeah, no, they're trying to position it more like sort of like experimental funds, just to capture the they're actually called dislocation funds.
And
yeah,
and we're actually seeing the same thing in the stock plan space, where and Google has some great data analytics tools. But unlike 2008, where company stock plan participants were running for the hills, what you're actually seeing now is increased traffic, where people are learning about their company stock plan and participating at higher levels in their stock plan. I would say the impact from just a numbers perspective, especially relative to 2008, is certainly on par. But I think this time around, and you really see it in the data, for whatever reason, the perception is different, and I think the confidence level is a little bit different for the folks at these companies.
Very interesting.
I'd agree.
So I get to an interesting next point, which is in more detail, how are you getting the message out there? What are the right ways to market? There's all sorts of different opportunities. Obviously, certain some of the biggest advertisers in the world have pulled out of the market. So on acquisition and general marketing, there's content marketing. Obviously, Drew and Aaron do big sales teams. I'd love to hear how you all are thinking about that.
Yeah, absolutely. Advertising in general has slowed in the more competitive channels, right? Because especially it's good for startups because we don't have to compete with 1,000 others right now. That said, though, I do think most companies are still figuring out, things around capital conservation and not gone fully into taking advantage of this, discounted pricing almost that they see on acquisition channels. That has definitely been the case for us. We are obviously seeing more demand, and we are seeing customer acquisition rates, go lower. But at the same time, this crisis is going to linger on for a while. So rather than, just hitting the burners immediately, it has been a much more disciplined, focused customer acquisition strategy for us. In terms of just the types of channels, in addition to the channels that we used to use before, obviously content, especially related to financial resources, and then just in general, I think financial cleanliness, right? Everybody's washing their hands more, but people are also looking into their bank accounts more. So just understanding that people are going to be changing behaviors because of this crisis, and like, you know, associating that with relevant content to educate and help people with resources is what we are focusing on.
Got it. Aaron, what about on your side?
Yeah. So in typical enterprise marketing, content marketing is obviously really important. I think what's unique right now is, especially from our side, there's a lot of thought leadership a lot of thought leadership content that's either in development or already out there. For us, because we primarily sell to public companies, we tend to spend a lot of our time in sort of industry trade publications and that kind of stuff that folks are really reading for both the technical content, but also to just get general ideas and perspective levers that can hold for their equity plans. But I mean, at the same time, and this is why I say working with public companies is so unique, a lot of them, especially when you get to some of the bigger ones, are battleships. They don't make decisions necessarily overnight. And even though there's been a lot of volatility, as things start to stabilize, there are some companies that are gathering a lot of information and kind of building out certain plans for what they want to do depending on what direction to go here. So I'd say at a really high level, because we're not a consumer product, we're not necessarily doing a huge amount of paid search or anything like that, but content marketing, especially for some of the more technical pieces, a big part of our strategy.
Interesting. I mean, I think content marketing has really been critical. I also think it's changed public perception. I mean, even what we're seeing with Acorns is enormous growth on a day-to-day basis with new accounts. And I think you never would have seen that 5 years ago. But even on the non-enterprise side, but on the direct-to-consumer side, the constant framing and contextualizing of what the markets are and how they're working, and even if it's down, it'll go up. I will finally, even everyday Americans really understand that it's important to be in the market, and that the markets being down is actually an opportunity, not a disaster, especially if they weren't in it already. And so it's been an interesting to watch how that's unfolded.
If I could just quickly add to that, I think one of the things that's so amazing about it is the three of us get to stand on the shoulders of the founders like Eli and Jeff and others who in 2008 were just building their companies. And now we live in a world where people are a lot more comfortable with these financial products. And you're starting to see the fruit of that labor, where in 2008, everyone was scared and was running for the hills. But now with Acorns, Robinhood, Betterment, Beyond, what you're starting to see is folks actually coming into the market saying, hey, I'm comfortable with this, and let me figure out how to best position myself for the next few years.
Totally. It's a real sea change. Drew, what about on your side? Does content play a big part or in the world that you're in?
Yeah, content does play a big part. It's more of a different approach, where it's actually a little bit what was mentioned before, where it's more education. Since I feel a lot of us, I don't know about your guys' inboxes, it's just been like COVID. So when the whole idea of don't try and play the COVID card, where you're trying to tell people about the market, since honestly, I don't think any of us have enough data points to see where this is really playing out. But it allows you to sort of have people understand what their options are without actually saying like, this is a COVID related response. And this is how we're really providing in all of these cases, sort of tool sets that can enable both from a direct sort of consumer side on individual products to even enterprise software to major institutional real estate owners. It's like, here's the options that you have, here's how they work, and let's figure out how to best incorporate this with your business plan. So it's actually more taking an educational, since we all have new products in the market. And so I think that is our main driver on both, since we sort of range a wide array. from major institutional real estate owners to small real estate owners to retail investors to big financial institutions. And actually, there are a lot of touch points that overlap. So it's more of taking the education and just driving home with that. And I think that ultimately also builds a better consumer base, so they're more educated and they can also speak freely to it as well.
Very interesting.
I think everybody is in, this trying to figure out the crisis mode, and that applies not just to markets, but to everything, right? Like, how do I do groceries to how do I figure out my 401k account? Everybody needs a little bit more guidance, a little bit more awareness. But at the same time, nobody can really predict what's going to happen. So I think the best we can do is just share what we know and provide and share the resources that we have.
Mm-hmm.
So flipping it, again, COVID, we're talking very much about the external sides, how it's affecting your business with your customers, how you're marketing. What about internally? I mean, this is a conference for founders, from founders. I was an entrepreneur before I started Torch. 3 different companies. So I think what would be really interesting is to hear from you how you're managing the problems that COVID's creating, whether it's cash flow, operation, strategy, hiring, or unfortunately laying off or salary reductions. If you had any big insights or themes that you could share, I think that'd be really valuable to the audience. Sure, why don't we start with going reverse?
Yeah, so our take is, I mean, the whole idea of when you have any major event is to have the pendulum swing from one side to the other. Especially a lot of the media doesn't help that because they're sort of propagating fear in some respects and the uncertainty. And our take has sort of been twofold. One, of course, reevaluate what the business plan is, what our scaling growth models are. So there is the watching on the conserving capital, just making sure that you're not just spending, since we don't know what the next 12 to 24 months is. But at the same time, I mean, there's opportunity to do amazing hires that we otherwise couldn't have, since you are seeing a lot of layoffs. So you have a larger talent pool, which is easier to access. And the nice thing about being a fintech startup is we can also all work remotely. All the functionality of the company still goes through. So I think all of us here actually have been blessed with, you don't need someone in the office, like everyone's sitting around technology that can both all of our interactions and even allowing for this forum to go on in the first place. So it's being cautious, but also looking for the opportunities presented, because there always is a silver lining. Like, there's two sides to every single problem. So we've actually seen it as move a little bit slower on some of the decision making, especially for large capital expenditures, but it hasn't really changed our plan. It's just sort of adding in that risk model, which I now joke will be in every future model, which is the COVID-19 experience. But it's to not be afraid, just move a little slower, and then just prepare for the worst, expect the best, and then land somewhere in the middle.
Yep. On the talent side, we actually did something interesting at Torch. We basically just seeing our portfolio companies and friends companies and just friends in the industry, a lot of layoffs of really talented people. And so we actually put what started as a Google sheet, now as a website together to connect people who were laid off with jobs that people are still hiring for. And the fascinating thing is we're up to, 600-700 jobs and people jobs. So it's actually people. Even in this environment, it's not like it's some people who've been laid off and 200 jobs available. It is equal. I mean, obviously different roles. But for the viewers, if any of you are interested in checking this out, it's a free tool. Go to torchcapital.vc, and on the upper right-hand side, you'll see talent. Or you can go to, make sure I get this right, it's talentconnect.torchcapital.vc. And again, feel free to post a job, feel free to post if you were actually laid off, and hopefully some connections will ensue from this. So not a silver lining, but at least making better of a tough situation. Nami, how are you dealing with this?
Yeah, I mean, Drew touched on many of the points, but I think number one, cash is king, right? We need to have a very, very strong cash position, and luckily we do. So we're comfortable with our runway, and we plan to maintain that. That said, this this new recessionary environment does create opportunity for product roadmap acceleration on our side, and we have been focused very much on that. So. We have not started hiring additionally or rolling out new products immediately, but a lot of that is in the works because there's a lot of talent available out in the markets because of this situation as well. And I think the best we can do is once again get ready once we have a little bit more clarity over the next couple of weeks. Right now, I think it's still murky waters in how this entire thing plays out. But in the next few months, we'll obviously have a lot more clarity, a lot more data, and we will be able to accelerate much faster.
Excellent. Aaron, would love to hear you.
Yeah. So we've been lucky to be in a position where we've been able to be offensive, where we've added to the team. And in fact, it's a little bit weird because before this happened, the team was in the office together every day. We've actually added a couple members to the team who have never seen the office, who were literally recruited start to finish entirely on a remote basis. Getting them their work laptops is quite an interesting logistical experiment right now. But I think from our perspective, we have a roadmap that we're executing against because we're lucky to be in a position where we can play offense right now. We're going to continue to execute against that roadmap. I will say, though, one of the things that we're thinking about is especially what happens if things open up and then have to shut back down. Because as you start to stretch out time, sort of the back and forth is just something to kind of keep in mind and think about from a planning perspective. But yeah, I'd say across the board, everyone in early stage company land is doing things internally to cut costs where possible, to be more thoughtful about decisions. Do we really need this right now? But especially people are the biggest asset, and being able to be opportunistic and add incredible talent to the team from some companies which by no fault of their own just got hit by the storm here and have remarkable talent pools has been great. And I'll say we've actually run a couple of interviews from some folks from the Torch list. So back when it was on Google Drive, we saw that, and there was a big talent pool on that list, and we reached out to some folks and started running interviews. So credit to the Torch team. That was an amazing tool to see, and it's one of the things I think from the investment community has been remarkable, where investors across the board are coming to the table with their network and connecting the dots to really make sure that that there's plenty of opportunity and that the piping is built between the folks that have talent and the companies that have opportunity for people to grow.
Wow.
I have to admit, I actually have that spreadsheet still open in one of my tabs.
Okay, that's great. Great. I'll shout out to my team member, Katie Reiner, who really shepherded this whole thing. Really, she's been awesome and gotten this moving really fast. We don't have much time. I don't know if they actually cut us off, but on a lighter note, I thought I'd actually ask each of you a non-fintech oriented question, but we've all been cooped up for 6 weeks. I'd love to hear from each of you a quick habit, weird habit, hobby, new skill, something interesting that you've learned or done differently in the last couple of weeks. I'm sure you're smiling more, so let's start with you.
Oh no, I was a slow believer in Peloton. When I found out there was a potential chance that I was going to have to be stuck in my apartment in New York City, where it's not as easy to get out and enjoy the fresh air and also get exercise, I bought a Peloton, and at the same time, I was like, if I'm buying a Peloton, I also bought stock. Stock's actually doing pretty well compared to the rest of my portfolio. But I think I'm in better shape now, actually, now that we've been in quarantine. than before. So it's the one silver lining. It's sort of like, if you're gonna be stuck in a prison, you might as well get
in shape. Yeah, no doubt.
Yeah, and also started cooking more. I don't think my oven had ever been used before being stuck in COVID.
Hear that.
That thing to admit.
Aaron, what about you?
I think the biggest new thing across the team everyone has learned is that Slack has really cool video conferencing tools, especially where you can draw on your team members' screens. We have a lot of fun with that. We're a Google Enterprise customer, so typically we use Google Hangouts, but we've had a lot of fun via Slack, especially just being kind of silly, being kind of funny. And actually, Snapchat rolled out an extension for Google Hangouts, Google Meet, where you can add filters and do all sorts of that stuff. So every day is kind of merging together here, and especially being in New York, if you go outside with a mask, the idea of getting some fresh air doesn't really happen because you're still wearing a mask. So we've tried to add some separation, keep things fun for the team as everyone goes through this together.
Yeah, definitely a big fan of the Snap camera and Zoom. My team has a lot of fun with it, and luckily, up until now, I haven't gotten the same fate as the Potato CEO founder, but who knows?
Yeah.
On my end, it's while Drew is cutting calories, I'm continuously increasing calories. I was very much into baking, and then last year I had a baby and I had no time to bake. Now I'm stuck at home with a baby and a startup, and sometimes I have, obviously started baking a little bit more than I used to. So that's the new, I guess, habit that I have formed in quarantine.
Love it. Yeah, well, now that Passover on my side is almost over, I may hit you up for some deliveries.
Absolutely. Sourdough starter, if you want some.
Okay. Deal. I don't know. I can't really tell. There's no real clock on this. I think we're supposed to end around 2:35. We can keep going until they shut us down. Anyone on Quarantine Summit team? Okay. Well, anyway, we can cut it ourselves. Before we do that, if anyone had any questions, why don't we take questions from the audience? You can just type it into the chat, and if not, then okay, there they are. All right, so we'll wrap it. Thanks everyone. Aaron, Drew, great meeting you. Nami, great to see you, and hopefully we'll all be out in the real world soon.
Yes, absolutely. Thank you, everyone.
Thank you to the Treasury team for setting this up and for listening in. Yep.
All right.
Take care.
Cheers.
Bye.